Not okay. Hello. Hello. Welcome, guys. All right. Sorry for the late start. We were having some connection issues. All right. But we are here now live. Um, Welcome back to another week of WPAT Strategy Showcase, where we don't waste any of your time talking about mindset and yada yada to actually waste your time just to try to learn something useful. All right. Cool. Once again, it's Raymond here. Thank you for sticking around. First thing first, what we're talking about here is going to be Forex trading, okay? So Forex is actually an investment product that is traded on margin, and therefore it is considered a high risk investment instrument, okay? It may not be suitable for everyone. If you are actually diving into this, without previous knowledge, we highly recommend test out whatever you're hearing here on a demo account. Now, for disclaimer purposes, you guys have to understand everything we do here is purely for educational purpose and also for entertainment purposes only. Okay, hopefully we can provide you some insights so that I can help you with your trading. All right. Okay. So before we start, I will inform you that we will be recording this session. Why? Because we will be taking some highlight snippets and put it on our Instagram and other social medias for you guys to probably rewatch the highlights when needed. Okay. All right. So recording is going to proceed now. Okay, guys. Welcome back to another week. Okay. Today we are not going to talk about um, our previous strategies or whatnot. I mean, we will, but the key for today is to actually talk about existing orders. Okay, it is a strategy in itself. Okay, it's a strategy in itself. Why? Is because whatever orders you have with whatever strategy you have, sometimes you may miss the opportunity to close them based on your strategy. Okay, or sometimes certain people just hang on to dear life and hopefully it will turn profitable. Okay, so we're going to talk about how to deal with opened orders. This is something that a lot of people probably don't talk about. Okay, but anyways, let's talk about how to deal with this strategy first on how to exit or how to actually deal with existing orders first. Okay. Then afterwards, that's when we're going to talk about the review of our previous 2, 3 strategies. Is that fair? All right. Okay. 1 second. 1 second. Okay. Sorry. I was just trying to reply to an email. Okay. Great. So now that we're here together, let's actually log in. Okay, so for example, right now it's perfect because we have 3 orders that are existent in the market. Okay, so let's quickly take a look. We have 1, 2, 3. These 3 orders were actually opened because of the pivot point strategy. And guess what? Because of my no attention to the account outside of these, should I say, trading webinars, okay, I've sort of ignored them, and unfortunately, they turned out to not be in a positive state. Okay, so I didn't actually follow my instructions on my exit plan with the pivot point trading, right? Because I had to bury my eyes on the charts, which apparently I didn't do. Okay, so I've been sort of leaving them hanging since the 23rd and then 26th and 28th. Okay, so you guys don't have to forgive me on anything. It's great that we did this because then this way we could actually talk about how to deal with existing orders. Cool. So if you guys think I'm wasting too much time right now, uh, let's not waste any more time. First thing first, because we entered the strategies with our pivot point strategy, okay, we will be actually checking out the pivot point strategy first. So how to do that, I'm going to drop it in. Cool. So pivot point strategy. What we talked about pivot points is that the pivot point is a 1 hour pivot point, okay? If our prices are below the pivot, we will do a sell. If the prices are above the pivot, we're going to do a buy. Okay, that's the basis of the strategy. So, based on the current situation, see, current price is actually below the pivot. Okay, it's below the pivot. So technically speaking, either we're going to give up this whole account, sorry, not account, give up this whole trade, right? That's an option. Or should we actually try and see how we could possibly save a little bit of the trade? Okay, so I'm sure a lot of people in Forex, okay, they will have to face this very, very important um, situation, whether to give up the trade or continue it. Now, there's two approaches. The first one is this. If we're actually going to give up the trade, okay, don't think twice. Let's just click that close button. Okay, take out whatever loss you have and then try to recuperate it via other trades in the future. Okay, but could there be other alternatives where we could possibly lower our losses as much as possible? Okay, yes, there is. Okay, so I will be typing. I don't know if you guys could see this, but I'm gonna have my notepad. Let me check. You guys see my notepad? I'm not sharing that, am I? Okay, nope, nope. It's okay. It's sort of laggy now, so I'm not going to share it. All right, guys. So please listen carefully, okay? The first option, if our strategy does not correspond with the current state, we could can it out, okay? Second option is to actually limit the risk. This is something very popular that you guys are seeing all the time. It's called hedging. So what happens is if I hedge, okay, then there is that opportunity where I will lock in this loss. Understood? So for example, if it was a buy right now on AUDJPY, okay, that I'm losing $64 in, I can actually do a sell order of the exact same lot size. And then because of that, I can possibly recuperate what? Okay, I could probably recuperate a little bit of my losses, okay, while locking in onto the losses. You get it? Okay, so that's option number one. Okay, so if I were to hedge into a sell, is this a good option? I'm not sure. We'll have to actually do some more analysis. Okay, all right, so that's the second strategy. Now there's a third strategy. Okay, oh, I see you guys cannot, I'm not showing my face. Let's see if my camera can turn on. Hello, guys. All right. Very laggy. Uh-oh, I better close that. All right. So first strategy, okay, just basically because it does not correspond with my strategy, I'm going to can it out and exit, okay? Second option with existing orders in the market that are negatives, you could actually hedge it to limit your risk, okay? Now the third strategy I'm going to share, okay? We're not going to apply on any of them yet, okay? But I'm going to share the idea first, and then we're going to go one by one to see what should be the best option now. Okay, so the third strategy is actually try to see if we could catch on the trends and cap in on profits and then have an average closure with overall profits. Understood? Okay, so what that means is, example, like grid martingale would be a great entry for your existing losing orders. Get what I mean? That's the third strategy. Okay, now, please don't jump on the gun and start giving me shit for saying, oh, it's martingale. Martingale's not a strategy. Wait, guys. It is a form of strategy if you're not blindly using it. Understood? Okay? So, what we need to take a look at now is we should actually do some analysis. So, let's drop into D1. Okay? Why do we have to look at D1? Because we want to look at the trend, the overall trend. So how to check out the overall trend? You drop into D1, you want to see the major direction of this pair, okay? Overall, it seems to still be on a bullish run, okay? So a buy position could probably be in the long term beneficial for us, okay? So that's the first thing we will check. Basically, all right, what's the trend right now for this pair? Okay, D1 seems to be bullish. Great, noted. Okay, so write that in my journal. Now, second, I'll drop it down to H4, and I do want to take a look at a few things. All right, so H4, right now, what I'm seeing is that it is a downtrend. Now, I will actually be utilizing this downtrend. Okay, I'm going to try to jot down my support resistances. Okay, So I want to be able to see, all right, I know it's overall an uptrend, but then also these support resistances, what's going to happen with them? Okay. All right. So right now, obviously prices will always be trading between these support resistances on a longer time frame. So H4, I've already jotted down some support resistance. Okay, I'm sorry. I think I jumped the gun a little bit. To check, how do you actually set up support resistance? Well, step-by-step process, okay? All we do, drop it down to a line chart, okay? So do a line chart, and then actually start taking your horizontal lines, okay, and pop it onto these highest points and lowest points that are very commonly found, okay? So for example, like this, you see, boom, boom, 1, 2, okay, but we'll try to bring it closer. So like there, you see, lots of low points matching, great, okay? So it's a subjective placement, okay? And then you could pop it back onto your candlesticks. Now, these will be your support resistance. The whole idea of support resistance, it is very subjective, okay? But overall, it should be almost in the same area. What is support resistance? The whole theory behind support resistance is this. Previous resistances will become future supports, okay? Or previous resistances can still become current supports. You see, there's a 50-50 chance, okay? And vice versa. Previous supports can become future resistances, or previous supports can become current or future supports. So it's a 50-50 chance. Okay? So how to use this? You have to see the overall trend, okay? And then you will actually be able to see where prices bounce up or down these support resistances. So for example, if today I'm going to place a sell, then most likely my sell, I will try to take a take profit at this location, which is my previous, what is it called? This is called the previous support based on this, okay? Now, obviously, if it's a resistance, okay, it would be like this side, right? Where prices hit it and then it dropped back down, okay? So then I will try to set this support as my exit plan for my sell order. Now, if I'm going to actually place a buy order, okay, there's a potential I should actually aim for this section, okay, this so-called resistance point as my take profit point. Are you guys with me? Okay. All right. So now let's go step by step, okay? The first strategy, which is just can the order out. Should we do that? Well, first thing first, okay? Right now, because on my D1, I still see that overall it seems to be bullish. So I'm not going to can that out, okay? Although there's something very important, okay? Take a look. You see the previous highs, okay? You see the highs that have been penetrated before is all the way back in 2013, you see? Oh, sorry, 2013, 2014, and then starting from then, we meet again on 2022, okay? And then now we're all trading within these zones in 2023 and 2024, okay? So you see, the prices did go on a bearish trend for a very long time. And then starting on 2020, then the market for AUD/JPY started going on a bullish direction, okay? So my overall big direction is still bullish, okay? But it is not um, a very popular bullish zone, okay? Right? So you see, for example, the last time it ever touched any of these support resistance zones were back in 2015, 2014, 2013, 2012, right? Okay, so 2008. You see, so these are not very strong bullish zones. But one of the things that we can also be very confident in is the fact that overall, right now, as of right now, okay, it is more bullish versus bearish on AUD/JPY, okay, the overall long-term trend. Okay, so that's number one. So then I'm gonna think, should we maintain the buy order? Okay. So for example, if it was me, I would maintain it because the overall big direction is still bullish. Although, okay, it seems to be a very strong resistance at this location where we place the buy. So if it's a very strong resistance, there's a high chance that it will try to target that resistance one more time. Okay. Will it actually penetrate above the resistance? We're not sure, but it's sure testing it. Okay, so now I'm sure a lot of people are like, all right, Raymond, stop the bullshit, right? This is called no bullshit trading. So why are you talking so much theoretic stuff? Your assumptions. Great. So let me tell you, this is my assumption, okay? That this is still overall on a bullish trend, okay? Because the highs are getting higher highs, okay? My lows are getting higher lows. So theoretically, it should still go up. But will it actually penetrate above? I'm not sure. Okay, so I will not can the order out. So then my first strategy of just canning the order is thrown out the window. Okay, now let's go to the second strategy. Remember, the second strategy is, should I actually hedge it? Should I hedge it? Should I hedge it so that I could try to limit my losses? Now, what do you guys think? Should Raymond hedge this? Okay. Now, I'm sure a lot of people may start asking the same questions like, maybe I should hedge. Well, let me tell you something. Okay. Based on our strategy of the pivot points, okay, you see prices are below the PP. Okay. And, okay, sorry, let me drop down to like a lower time frame so you guys can see. Okay. See the pivot points 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? The pivot points are sort of starting to turn up a little bit, but overall, you see the pivots are getting lower and lower, right? Okay. And then guess what? With my moving average, you see prices are all trading with this moving average. So it's sticking around. So let me tell you something. Yeah, for sure I would be doing a sell order. Why? Okay, very simple. Because if I'm going to stick with the pivot point strategy, you see, prices are below the pivot. So I shall hedge it. Okay, so I will do a sell order. Great. Now, now, by hedging, I've sort of locked in my loss. But, but, we have to consider the fact that there's swap. Okay, obviously in certain brokers, maybe there's no swap, okay? But in some brokers, there's some swap, okay? Usually swap is super normal because every liquidity provider actually takes swap. They charge swap to the broker. So if the broker doesn't charge swap, that basically means that they are actually taking the swap hit by themselves. They're paying the swap for you, okay? So now, you see, yeah, sure, based on my pivot point, I will place a sell because it's sticking to my strategy. But should I just leave it at that? I actually wouldn't. I wouldn't. Why? Because I already said my overall direction is bullish, right? Although right now in the short term it seems like it's actually going down. Okay, so based on my pivot point strategy, I will place a sell. Okay, but of course, if it disrespects my pivot point strategy, I will still exit my latest order. Understood? Okay, so in the case that my prices go above my pivot point, I will exit my sell order. You understand? But what will I do? Okay, I want to limit my loss as much as possible. So what happens is overall, I know it's still bullish, right? Oh, sorry, I should drop it down. You see, I know it's still bullish. So what I'm gonna do is this. You see, I will actually place a buy. Okay. Now, in a buy, I could do a grid style. Grid style means I do not increase my lot size. If I entered with 0.06 lots, I'm gonna enter with another 0.06 lots. Okay. Or I want to try to cash in as much profits as possible in the case the market does go up. Okay, so I will increase my lot size. Okay, now I'm not going to do pure martingale. Okay, pure martingale will increase my risk by a lot. Pure martingale basically means doubling my lot size. So then when it meets in the middle, I get to break even. Understood? Okay, so for example, I'm not going to double it right away, but I will add a 0.03 lots and I will place a buy. All right, guys, sorry. I have to say this because we're on YouTube and we're live, okay? I am actually not providing any signals whatsoever right now, okay? Everything that we're doing is purely for educational purpose and also for entertainment purposes only, okay? If you haven't tried out any of these strategies that we're talking about and you're interested in it, do test them out on the demo account. Understand the logic first before you jump on board, okay? All right. That being said, let's move on. See, look, the potential of the prices do going moving up is there. Okay, why? Because my overall direction on D1 is still overall a bullish trend. Obviously, it may be capped at my highest point of resistance. So to try to limit my own risk, okay, um, I can consider, okay, maybe this will become super profitable. But then in the case that I want to make sure to cash in some profits, I will set my take profit point on my latest resistance. Okay, so I'll do it not right on the resistance, but rather sort of a little bit below my resistance. Why? Because I want to let the spreads play around with it a little bit, right? Cool. So you see, in the case my buy order, you see I've already set a take profit point. Now my take profit would be set around my resistance point. Why? Because then this will make sure I can cash in when it hits profits. Okay? Now, when it hits profits, then I can now consider, all right, what if I made $20 profit? Then I can now start considering to close this order that's in losses, right? But I'm not going to close everything. You know what I can do? I can start modifying and closing the order. You see, look, I can do a market execution, okay? And I could actually close 0.01 lots. So for example, I could close 0.01 lots. I could close 0.02 lots and then start breaking even my orders. You understand? Okay, so this is a super important way on maneuvering your existing orders. Okay, so you see, we actually talked about 3 different strategies today on how to deal with your existing loss orders or losing orders, or should I say floating loss orders, right? So the first thing you can do, quick recap, quick recap, super important. Okay, what you can do is can out everything. Okay, because it does not respect your trading strategy, so you're going to can it all out. Okay, just take the hit and you move on with your life. Okay, and try to make it back in the future. Second strategy we talked about on how to deal with existing orders is basically taking by hedging it out. Hedge loss. Um, with this being said, I'm gonna quickly let you guys know what we just did, right? Uh, First thing, we did not can out our losing trade. Why? Because the reason here on D1, you see, we see the overall direction is still bullish. Okay, the highs are getting higher. You see, you can see this super clearly with our line chart. Okay, you see the highs, right? Boom, boom, boom. The highs are getting higher and the lows are getting higher. Okay, so then there's a chance that it will still be bullish. Great. So let me not can it out because I still have a lot of balance that I could still play with. So let's work around with that. Then let's check out my second option. Should I hedge it? Okay, now we have to go back to one of our strategies to see if we should hedge it. So let's take a look on my M15, which is with a pivot point strategy. Prices are below the pivot. So yeah, for sure, let's hedge it. Let's place a sell. Let me respect this pivot point strategy as much as possible. So let me place the same order, lot size, sell. Great, so I hedged it. Now, apart from a hedge, what should I do? Should I actually place my third and last strategy to see if I could try to cut as much losses as possible? Well, why not? Let's take a look, right? there's two options. One, I could either do a grid system by utilizing the same lot size and place a trade on the same direction as my losing trade, which is a buy, or should I actually increase my lot size so then I could try to balance out my losses? Okay. Now, obviously, I decided to stick with D1's overall direction of the trend. So I wanted to actually place my buy orders. Okay. And then my sell order is actually totally based on just my pivot point strategy. Okay, so we actually entered on two strategies and let's see what we can actually come up with. Okay, all right, so this is AUDJPY. Now let's move on to AUDCAD. Okay, AUDCAD. You see, we have a buy order right now that's stuck and then we have a sell. All right, so let's quickly take a look. Okay, let's drop it down to the pivot point strategy. All right, sell. Of course, it should be a sell. Okay, so I will maintain the sell order. I'm not going to can it out. Why? Because prices currently are below my pivot point. Okay, now I may exit the sell when? If the prices go above my pivot point. Okay, so I'm going to stick my sell order around. You see, this is the sell order right now. So it's fine. Now, what about my buy order? Let's quickly take a look. This is the buy order. Oh my, we bought in such a high zone, huh? Okay, so should we continue with this buy order? Well, let's quickly take a look at a few things. Let's take a look at D1, the overall direction. Okay, you see, overall direction seems to be actually bearish. Okay, bearish. Cool. But, but, let's see. If the buy position would have any hopes on probably becoming less, should I say, less in losses, I don't know. Let's quickly, use our different strategies to take a look. Prices went above my moving average. Right now, my moving average is pointing upwards, although my prices are below it. But obviously, the wicks are testing the market out. So right now, it's trading on the moving average. If my moving average is pointing upwards, there's a chance that my trend could still go up. Now, how do I confirm more? Let's see. We can actually use our our stochastics and RSI strategy that we learned on day one. Let's quickly take a look. D1, any signs? You see, it actually reached the bottom of our oversold, right? So RSI potentially would still spike up. So there's a chance that the market would still go up. Now, moving average price is right there, so there's a chance that it will still be going upwards. All right, H4, do we have any signals? Let's see. H4. H4 gave us a signal of an overbought. So technically signaling a sell order. Okay, so then technically we would be entering into a sell order if we were trading our RSI stochastics, and we would have been very, very happy. Okay, all right. So let's see. If we're actually on a sell signal, let's take a look at H1. Okay, if it actually ever reached our oversold zones. Okay, it actually did, right? It actually hit our oversold zones 1, 2, and 3, 4, 5, 5 times. Okay, so it actually hit all of our oversold zones. Okay, on H1 many times. All right, so what to do? Should we, three options, remember? Okay, first option, should I can out the whole order of my buy? Okay, or second, should I hedge it? Okay, or three, right now, based on our trading strategies, can I add on to the trade? Either do a grid style trading or a martingale style trading, which is just to add on some lot size and try to average out to limit my losses, right? Okay, so obviously the hedge already happened. Why? Because you see AUD, CAD, okay, we already have both the buy and a sell order. Okay, so I'm not going to continue to think about the hedge anymore because it's not necessarily for hedge. It's already hedged. Okay. All right. So then now I have to consider, will the market possibly go up so then I can maintain my buy and try to limit the losses as much as possible, right? That's what I need to take a look at now. So based on D1, okay, we do not see the signs of oversold, okay, on both stochastics or RSI. So it didn't give us a very, very clear entry point. Let's drop it down to H4. Okay, H4, did it give us a very clear entry point of a potential buy signal? No, because you see, RSI and stochastics are not in the oversold section. Great, so then now let's do H1 and we actually take a look. Okay, did we actually get any potential signals for a buy order by utilizing the same ideology or the same rules? Well, over here, okay, over here, we did have a buy signal. Over here, okay, oversold, oversold, we would have a buy, okay, and obviously, we would have already lost our chances because we would have already been profitable here, right? Okay, great. So technically speaking, without having a clear signal on D1, H4, and H1 for my buy, I wouldn't want to continue this trade. Okay, I won't because the risk is just too high. Why? Because D1, my overall, you see direction still very bearish. Okay, so for safety's sake, let's just can it all out. So done. Let's can it out. Why? Well, overall, we are profitable. We still have $380. Might as well can it out and then reset the strategy. Understood? Okay. All right. So yeah, we canned it out. Cool. Ooh, now we have to think about, darn, how do we recuperate and make back money? Okay, that's all we have to think about. So let's actually go back to our strategy of the stochastics and RSI. Let's actually review to see if we have some good entry points. Okay, now remember with stochastics, RSI, this trading methodology, always use D1. D1 will always give you the best entry points. Okay. We're looking for overbought, oversold. Okay. All right. Now, don't do it on every single pair. You are only allowed to do this on pairs that are more popular, which is the major pairs. Okay, so let's take a look at this together. Ooh, cool. All right, you see, we actually got an overbought section over here on the USD CHF. Okay, this indicates a sell. All right, on D1. All right, let's take a look at H4. Let's see, H4 already sell. Ooh, wow. Yeah, would have been nice if we entered on the 13th, wouldn't it? Great. So we're quite late. We're quite delayed on this. Okay. So you see, if we entered on the 13th, you see, we would have already exited over here. So we would have already made some profits. 77 pips, actually. All right. Okay, H4. Any signals for entry right now for a sell? No. So let's skip it. Let's take a look at Euro USD. D1, nope. AUD USD, nope. Euro CAD, oh, Euro CAD is interesting. Take a look. Stochastics on the overbought. RSI is nearing the top. Okay, so there's a chance that a Euro CAD may show up with a potential overbought sign. Now let's do H4 just to see if we can have some entry points. H4 already shown entry points about a few hours ago, actually yesterday, if anything, right? So a few 4 hours is ago. Okay, so remember our strategy before that we could drop it down to H4, although you could get more fake outs, okay, but we could actually go in. All right. So with our strategy of the stochastics and RSI that we learned, okay, we will be entering with a different lot size so then we all know what it is, 0.1, okay? So I'm going to place a sell. Why? Because I want to enter with my overbought of the RSI and overbought of the stochastics. Understood? All right, and how will I exit? Remember, exit will be based on H1. If my H1 ever hits my 30 zone on the RSI, I will exit the trade. No questions asked. Understood? Great. So let's continue searching our potential entries. Ooh, okay. This is very interesting. Overbought, overbought. GBP, JPY. Okay. Well, this, a lot of people may start thinking, no, this is so risky. Okay, this is overall, you see, the whole direction is very bullish. I agree with you. I 100% agree with you. It is actually quite risky. So, we're gonna do this for you guys. Okay, don't just jump on the trades blindly, guys. Okay, we're gonna do the experimentation for you, and let's take a look at what happens with the end result. We're going to stick to strategy. So by sticking to strategy with D1, it basically means if it overbought matches, we will enter into a sell. So we will enter into a sell to show you guys. Okay, so GBP JPY. And let's keep on observing, see what happens. Okay. Ooh, GBP CAD, very close, very close. If we drop it to H4, do we have an entry point? Ooh, yes, we do. Okay, well, same idea here, okay? GBP CAD on H4, we do have an entry point, okay, of a potential sell because of the overbought from the stochastics and RSI. But the chances of a potential fake out is actually there. Why? Because we're not on D1, rather we're on H4. Okay? But it's okay because you guys complained that my strategies that are being showcased take forever to showcase any potential entry points. So we made some adjustments with H4, right? So I will be adventurous and help you maneuver around it. So we will actually place a sell. Understood? Okay. All right. But this is based on H4 purposes. All right. Ooh. Euro JPY. Euro JPY, you see over, well, not really. That didn't really work. If we do H4, then maybe. You see there's a sell around this location, overbought, and then overbought, second sell. So you would have one sell, two sell orders, and you would have already exited the trade. Okay, you would have already exited the trade. So we're too late for this. Forget about it. Then USD CAD, potential, potential. If we do H4, ooh, potential, but it's not quite there. It's not on an overbought. So it's not sticking to strategy. So we're not going to do anything. All right. So regards to my current AUD JPY, this oh, right, we talked about this already. Okay, great. Let's take a look. Cool. H4. Ooh, look at that. H4 is on the AUD JPY. It's all overbought. Sorry, oversold. Okay, you see oversold, oversold. So technically speaking, we should enter into a buy, which, well, luckily we did. Okay, because we were gonna deal with the existing market order, right, of the AUD JPY on a buy. We did notice that there's a potential buy. We're gonna exit our buy order. We could exit it with H1. As long as my H1 reaches my 70 zone, I will exit my buy order and hopefully limit the loss on my original buy with the pivot point, of course. Okay, great. Well, that's the stats of the trades right now today. The last thing as a freebie, I do want to throw gold just so then we can take a look at it together. Does it stick with our stochastics and RSI strategy? No. H4? No. Okay, so then what about the pivot point strategy? Gold. Okay, so our pivot points on H1, let's quickly take a look, drop it down to M15. Ooh, look, prices are currently below the PP, which is the pivot point. Okay, so there's a potential sign for a sell. Okay, but in the case that the price does go above my pivot point, then we'll have to possibly exit the trade. Okay, right now it doesn't seem that promising. Okay, but um, if we were to stick with the pivot point strategy rule, okay, we would be entering into a sell right now. Okay, so anyway, sticking to the rules, we will drop it down to 0.05 lots, okay? And we will do a sell. All right, we will, for educational purposes, let's test it out for you, okay? Because we're not going to use feeling to justify what to do. Rather, we're going to use the strategy and test them out. Thank you for sticking around, okay? And I shall see you next week. And let's see how to actually maneuver with our open orders more next week and actually elongate and um, make our pivot point strategy more mature, okay? Thanks, guys, for your time. We'll see you next week.